Welcome to the Friends with Money podcast, brought to you by Money Magazine, creating financial freedom for Australians since 1999.
Hello and thanks for joining us for another episode of Friends with Money, Money Magazine's podcast to help you earn, save and achieve your financial goals. My name is Tom Watson, a senior journalist here at Money Magazine, and as always, it is a pleasure to be with you. In April 2022, Roy Morgan released some research which revealed that more than 1 million Australians over the age of 18 owned cryptocurrency. And that number is likely to be even higher now, anywhere between 15 and 30% of Australian adults, depending on the source of the research that you want to use. Whatever the exact number, it is clear that a decent chunk of Australians are holding cryptocurrency, and many more are likely to have had their interest piqued in recent months following some pretty major news events, including the SEC's ruling on spot Bitcoin and Ethereum ETFs in the US. So as you can tell, today's episode is all about cryptocurrency and addressing some of the fundamental questions about it for any of our crypto-curious listeners. And to help us dig in, I am very pleased to say that we are joined today by Janine Grainger, founder and CEO of cryptocurrency trading platform EasyCrypto. Janine, welcome to Friends with Money.
Hey, Tom. Nice to be on. Thanks for having me on the show.
You are so welcome. It's lovely to have you here, and it's great to be able to kind of delve into cryptocurrency for the first time, as we were saying before this show. So, Janine, I think, first of all, it'd be great to nail one of the fundamental questions that many people who aren't familiar with cryptocurrency probably have, and that is, what actually is cryptocurrency? You know, what do we mean when we're talking about it?
Look, very simply, cryptocurrency is just a way to exchange value. It's not really much more complicated than that when you boil it down in a nutshell. It can sound daunting because it's got that word crypto in it, but if you ignore that part for a second, it just becomes a currency, and a currency that is fully digital. So having a fully digital currency or way to exchange value has some pretty cool benefits, right? It can be sent to anyone, anywhere in the world instantly and with no or low cost. And that's quite different if you think about how traditional money works. And if you wanted to send money around the world, the costs and delays involved in that. And then there's all sorts of other cool functionality that different cryptocurrencies are building on. And really, it's quite early days for crypto still. We've only just started moving into this digital idea of money, digital idea of assets. And there's a lot of really interesting innovations and cool things coming out there.
You touched on different cryptocurrencies, and that gives me a perfect segue to, I guess, get you to give us a bit of a flavor of the broader crypto universe. So what are some of the major cryptocurrencies that are currently in existence, and I guess the different types of cryptocurrencies as well?
Yeah, I mean, there is a massive amount of diversity out there. I think last I looked, there's over 15,000 different cryptocurrencies on the market. So it can be a little bit hard to know where to get started. But I'll give you the Janine Grainger guide to crypto assets, which in my mind, crypto assets sort of fall into four main groups. So your first one is Bitcoin, and I sort of see Bitcoin as being a bit distinct from anything else on market, and I'll jump into the reasons why shortly. You've got Bitcoin as one, you've got stable coins as a second category, you've got NFTs as a third category, and then everything else. So I'll break those down a little bit as to sort of why I group them that way and what the different benefits or rationales for those are. Bitcoin's a really interesting one to start with. So it was the first ever cryptocurrency. It was how we started this whole blockchain thing, how we started digital assets. It's still the most famous one out there and, really the granddaddy of cryptocurrencies. And the interesting thing here is that typically the first version of something is not the best. It's not the longevity one, right? Like if you think about your first search engine, it wasn't Google. The first social media platform doesn't exist anymore. But Bitcoin is a bit different in that regard, in that it's really stood the test of time, and it has this unique proposition that sets it aside from everything else. It's got that brand, that longevity, that trust, and it really acts like digital gold, like a store of value, store of wealth. So your second category, so leave Bitcoin aside as just this being unique category of one. Then you've got stable coins, which are much newer onto the cryptocurrency scene, but they're really like a digital version of traditional money. So the Australian dollar, the US dollar, if you put that into a digital rails, you can send that money anywhere in the world instantly, no or low cost, and you can do that in a way that doesn't have this volatility. Like if I were to pay I have staff all around the world, and a lot of my staff I pay in stable coins. I wouldn't want to pay them in Bitcoin because, trying to work out how much to send and the value could change between me sending it and then receiving it. but I can use these digital versions of real currency to pay people. And so stablecoins are really valuable and really useful for actually just turning money and turning finance digital.
Mm.
That third category is NFTs, which most people probably think of as being monkey JPEGs or silly, images online.
Exactly what I was thinking, Janine, when you said that. Yes.
Yeah, and I think NFTs is a bit of a strange term, right? It stands for non-fungible token, which means nothing to anyone outside of the crypto world. But really what an NFT is, it is a unique representation of value. So if you have a digital Australian dollar, one Australian dollar is like any other. They don't need to be unique. But an NFT takes this idea of digital value and makes it unique. So you could do things like digital identity. You could put, house titles on the blockchain or have digital version of those. You can do, tracing of origin of products, provenance, logistics, supply chain. There's all sorts of really interesting things you can do once you take the concept of a unique identifier digital. So far, the most common or sort of the first use case we've seen of those is collectibles. And so NFTs are kind of like, baseball cards or other collectibles, but I think NFTs is something we're going to see a lot more of in the future. And there's a lot of real world use cases that you can do with that concept of unique digital identifier. So that was category 3. And the fourth category is everything else. And there's a lot in there, right? There's a lot of super cool stuff. But for me, the everything else category, it has to have a use case to be valuable. And we can go through into some of the things that fall in that everything else category, but really that's always my question when I look at something outside of the Bitcoin, the stable coins, or the NFTs is what is the use case? What is it doing? Why would this particular currency or this particular token have value compared to another?
Well, let us delve into that very briefly then, Janine. So what I guess the point I'm interested in with this fourth category is, are we talking about, coins, cryptocurrencies that people will have heard of in that group? Are we talking about things like meme coins, or is it something else?
Yeah, so you've got, I'll maybe touch on a few of the common ones, right? Like one that probably a lot of people have heard of will be Ethereum. So Ethereum was, Bitcoin was this first digital currency, and then a few others came after. And then Ethereum really was the next big leap forward in crypto assets because it's a platform currency. So it's basically an infrastructure layer that other projects and other platforms can build on top of. A lot of your meme coins sit on top of Ethereum. Like Shiba Inu, for example, is a meme coin that runs on the Ethereum blockchain. So Ethereum, you can sort of see it maybe a bit like an airport, right? You've got this piece of infrastructure. You have a lot of people coming into it, planes landing, and that base infrastructure is what a lot of other things are built on. You've got, Ethereum was that first generation of infrastructure layers, and a lot of others have come out since that try to solve some of the problems of scalability, cross-chain transactions, bridging, privacy, mobility, decentralization. There's all sorts of challenges that come with building these quite technical pieces of infrastructure for digital assets. And you have newer currencies like Solana is another one that, does a very similar function to Ethereum, but it's a newer technology, a newer generation that tries to be a bit more scalable. Although, I won't dive into the pros and cons here. I might get lynched, but, it's a really interesting piece of, innovation, how these different cryptocurrencies are working and the problems that they're trying to solve and the trade-offs they're making on that.
I get the feeling that you could easily talk about this for another 20 or 30 minutes and we could ditch the rest of the questions in this podcast. But I might get in trouble if I do that. So let's bring it back to another one of the kind of, I guess, the fundamental questions then, Janine. So you've already touched on this to a degree, but if you had to distill it, what would you say the purpose of cryptocurrency is? I mean, fundamentally related to that, why should Australians, why should people all over the world care about it?
Yeah, for me, the fundamental purpose, if you step right back and look at all of it, is it's around the digitization of the financial system. And, we've seen this massive change in how our lives work with the digitization that came to us through the internet, right? And I don't know if you're about my age, but I can remember what the world was like before the internet, right? And how much things have changed. And things like HelloFresh and Wikipedia and even this chat that we're having right now, none of that would have been possible without the internet. And so one of the areas of life, though, that's been relatively untouched by this digital digitization that we see all around us is money. So finance, your stocks and shares, when you buy them, they're still in a very analog, traditional stock market. When you work inside a bank, I used to work in banking, and a lot of things under the scenes in a bank, your money looks a little bit digital in your app, but when you go behind the scenes, there's a lot of analog stuff, a lot of paperwork, a lot of internally held ledgers. So the real benefit and the real use case of cryptocurrencies or crypto assets more broadly is enabling us to digitize value. And so that's where I think, it's a really interesting thing for people to dive in on, because there is not, I think it's unavoidable that in 10, 20 years, our financial systems wouldn't have digitized. So we can all get in on the ground level on that now. We can start learning about it, understanding how it works, dipping our toes in with cryptocurrencies and get ahead of that, impending change that's going to be coming.
I think it's that side of things is so fascinating, and I was trying to wrap my head around it for a piece that's coming out in Money Magazine itself in a couple of months' time, all about blockchain and bits and pieces to do with that.
Oh,
And I'm
nice.
very very much learning though, so it's a lot to take on. You touched on this again a little bit before, Janine. Obviously, one of the big things that has people interested in cryptocurrency is using it or purchasing it, holding it as an investment. Obviously, every investment has its pros and cons, but what are the potential, I guess, the benefits and the risks of holding cryptocurrency as an investment?
Sure. And look, I'll probably preface this entire section by just saying that, it is really important to do your own research and to make the best choice for yourself, to look at, the pros and cons, your particular situation. And of course, if you need to, do get financial advice. Although I understand that in Australia, financial advisors cannot advise on cryptocurrency. So it might just be a do your own research one on this one.
Great point. Yep.
So looking at the risks, I think there's two main categories of risks. One is the risks of the asset you're looking at buying and selling. So, if you're looking at Bitcoin, Ethereum, Solana, Dogecoin, other, Pepe meme coins, like what is the risk on that crypto asset? And secondly, there is the risk of how you are buying and storing that asset. So firstly, with the crypto asset risk, this is really, I think, a lot around diversification. You don't, with all financial investments, you don't want to put all of your eggs in one basket. Cryptocurrency in particular is a really volatile investment class. So you want to think about how much volatility am I willing to take? If this investment, halved in value, if it dropped to zero, is that a risk that I'd be, willing to look at? You can look at, the past returns obviously are no indicator of future performance, but it is useful to look at how long has a cryptocurrency been around? How's it performed? Is it a tried and tested currency, or is it something that's just come out in the last month or two? And that obviously would, hold quite a lot more risk potentially than something that's been around for the last, decade.
Hmm.
So while you're looking at sort of, the risks of the assets themselves, and I think, a good rule of thumb can be around portfolio diversification. I've seen a lot of studies and a lot of talk around somewhere between 5 and 10% of a portfolio allocated to cryptocurrency, can perform well. Again, past returns no indicator of future performance, but that's often a relatively approachable level of risk for people. That may be higher for some people. We recently did a study that found like a lot of people are not able to get into the property market, sort of the millennials and Gen Zs, and a lot of them are looking at crypto assets as an alternative investment class that, they can invest in. So that's sort of the risk of the asset itself. And then separate to that, you've got the risk of where you buy it and how you store it. I would always say to people, always buy crypto assets through registered platforms. All of the, whether you're in Australia, New Zealand, any other country around the world, governments have regulations for financial services providers or for crypto asset exchanges that help protect you as a customer. So don't buy from a offshore company. Don't buy from someone that you've met on Facebook or Instagram. Buy through an exchange or a broker that's regulated, because that gives you a good level of protection should anything go wrong. And the last bit on that is where you store your assets. And I'm a big proponent of storing your crypto assets in your own wallets. A lot of people store their assets on exchanges, and that
Mm.
runs the risk of that exchange going under and taking your assets with them. We saw that really high profile case recently of FTX. They had billions of dollars, I think, of people's assets, and the whole thing was just a bit of a sham, and they went under and took those assets with them. Australia's bringing out some regulation in the future that will protect consumers better in that regards. But until that regulation comes out, and possibly even after that, it's always best practice to hold your assets in your own wallets where they're fully in your control and you're not sort of giving those assets or that trust to anyone else.
Makes a lot of sense. And I think on the FTX point, I think it's somewhere between 10 and 50,000 Australians got
Oof.
hit by that, as far as I know. So just goes to show the kind of, I guess, the scale there and the importance of doing your best to keep any assets that you do hold, safe, as you said. Janine, you touched on this, and this is probably where I'd like to end our conversation today. But where are we at in terms of regulation in Australia, and what is the government doing, and what might we see as consumers, and I guess the period ahead in terms of the regulation of crypto assets?
Yeah, and I think it's a really pertinent question because, as you touched on at the start, more and more Australians are investing in crypto, are curious about this asset class. It's becoming a more pertinent question. We did some research recently that found that 20% of Australians now own or have owned crypto, and more than 1 million of them are looking at getting into cryptocurrency for the first time in the next year. So that's a huge amount of people that are sort of dipping their toes in on this, and really important, I think, for the regulation to be there to help keep people safe. So with cryptocurrency regulation in Australia, there's, I guess, your tax regulation. And interesting point on that the ATO, the Australian Tax Office, noted that some 600,000 Australians reported crypto holdings in their tax returns. So a lot of people have crypto and a lot of people are reporting it, which is good. It is taxable for income tax, and it's viewed as an asset that is held or traded rather than a money or a foreign currency. So definitely an area to get advice on, but just good for people to know that crypto isn't outside of the long arms of the tax office. Secondly, there's a lot of regulation specific to crypto coming from ASIC, and this is around sort of, I guess, your consumer protections, how the crypto market in Australia operates, and how, what requirements there are on providers like EasyCrypto who are selling cryptocurrency to the general public. ASIC's been pretty forward-thinking on this. They started with a token mapping exercise a year or two ago, which is sort of well in advance of a lot of other countries. And then looking at things, the regulation that we thought might be coming out sort of late last year hasn't yet sort of hit market, but we are expecting there to be regulation around things that help ensure better investor protections, like separation of custodial services, the people who are holding your cryptocurrency on your behalf, from exchanges, the people who are doing the trading. And that kind of separation would have helped avoid disasters like the FTX. So it's really good to see the Australian regulators leaning into this, understanding the industry, and putting in place or looking to put in place regulations that will help protect consumers.
Definitely. And I guess we'll wait and see when everything kind of comes into place in that respect. Janine, this has absolutely flown by, but we are running out of time. So thank you so much for joining us. It's been a pleasure having you on the show and learning way more about crypto today.
Hey, look, thanks so much for having me on. It was great to catch up, and appreciate the insightful questions.
Not a problem. That's it for this episode of the Friends with Money podcast, but don't forget to jump on our website, moneymag.com.au, for your daily dose of financial news, or you can go grab yourself a copy of the latest edition of Money Magazine in all good newsagents. As always, Friends with Money will be right back in your podcast feed next week. So until then, I'm Tom Watson. Goodbye for now.
Thanks for listening to the Friends with Money podcast. For credible, independent, and easy to understand financial commentary, visit moneymag.com.au. Please remember that the views and opinions expressed in this podcast are general in nature, and further independent advice and research based on your personal circumstances should be sought before making an investment decision.